In this video, we are going to talk about 10 ways on how to make money work for you. So before starting, please like this video and subscribe to How to Make Money Top 10 Videos channel and ring the bell for our future updates. Money management may be difficult, especially when you think you're doing everything correctly but your savings aren't increasing fast enough and your debt isn't going away. But it doesn't have to be that way all of the time. You can build your money and take advantage of rewards and discounts without putting in too much effort when your money works for you. It doesn't have to be a difficult procedure. Here are some ideas to get started. Number 10. Pay more than just the minimum on your monthly debt payments. Interest costs can take up a significant portion of your monthly payment. When you only pay the minimum monthly payment on a bill, the majority of your money goes toward interest. In other words, you may feel as if you're paying and paying but not seeing a decrease in your balance. So, if you can afford it, try paying a bit more than the minimum each month to make sure you can get a handle on some of that debt. Even $20 more above the bare minimum can make a big difference. Simply confirm with your loan servicer that the extra funds will be applied to your principal rather than next month's interest. Number 9. Don't forget to claim any tax credits you may be eligible for. For example, if you took classes last year, you may be eligible for a $2,500 tax credit under the American Opportunity Tax Credit. To qualify, you must be a part-time student at an accredited university who hasn't claimed the tax credit in 4 years. To earn the entire benefit, your income must be below $80,000, or $160,000 if married. The IRS's website has more information, however here is a summary of the main topics. But a tuition tax credit is only one of many available. Tax credits for families and households earning a particular amount are also available. Ask a tax expert what credits you may be eligible for. Number 8. Use your health insurance, student, or work perks for discounts on popular products and services. If you work for a firm, they may have discount programs with big or local brands so workers can get coupons, free trials, and more. For more information, contact your company's benefits staff or HR department. Once you're certain you're eligible for a workplace discount, make it a practice to look into it before you buy anything. Saving this money can help with other expenses. If you have health insurance, you may also be eligible for discounts on gym memberships, diabetes supplies, and meditation apps. Examine your policy to see if you're missing out on any savings. And, of course, students may obtain discounts on anything with their student ID. Don't be shy about asking for student discounts. Number 7. Use credit cards with rewards you'll actually use. Rewards credit cards seem to be everywhere, and for good reason. It's quite nice to earn points toward free flights, cash back, and gift cards just by shopping. It's like getting a reward for shopping. There are numerous rewards cards available, but the one that best suits your lifestyle will maximize your earnings. You may earn points toward free flights and hotel stays by using a credit card that earns points toward such rewards. If you prefer to earn a large sum of cash back and spend it any way you wish, a card with a high cash back percent may be for you. Remember that many of the best rewards credit cards come with large annual fees, so assess your demands and decide if the price is worth it. Also, avoid making excessive purchases merely to earn points. Number 6. Pay off your credit cards in full each month. Using a credit card to pay for anything typically results in overpaying. If you don't pay the amount in full, you'll incur interest. Credit card rates are famously high. New accounts average 17.87%. So if you don't pay off your balance in full after every purchase, your wallet will suffer. Paying off your bill regularly might also increase your credit score. Your credit score determines whether or not you qualify for a loan, high, prospective homebuyers, and the interest rate you pay. So good credit can pay for itself many times over. You may get your credit score from your bank or a service like Experian if you don't know it. You'll have all the tools you need to track your score, learn how it's calculated, and change your habits to enhance it. Number 5. One-up your retirement fund by opening up a Roth IRA account. Open a Roth IRA if you're serious about investing your retirement funds. You can open the account. That is, if you are self-employed or your employer does not provide retirement benefits. Do I really need more than one retirement account? You may wonder if you have a 401k. But here's the lovely Roth IRA. You will not be taxed on retirement withdrawals. Because you'll be contributing after-tax funds to the account. Traditional 401k withdrawals are taxed in retirement. A Roth 401k offers similar tax benefits as a Roth IRA, but not all businesses offer it. Basically, a Roth IRA can help you save tax-free for retirement. Isn't it cool? Number 4. If your company has a 401k plan, opt in, especially if they offer to match. A 401k can be a game changer when it comes to retirement planning. Some workplaces provide a 401k matching program. Double check with your HR department if you're not sure. In simple terms, if you contribute up to a specific percentage of your salary, your company will match all or part of it. So, let's suppose you need to contribute 5% to obtain a dollar-for-dollar match. Even though you're only giving 5%, you're effectively saving 10% for retirement. Simply pay attention to your company's matching terms. If you don't contribute the required match percentage, you will not be eligible for the additional funds from your employer. And if you're interested in learning more about 401k plans, we've already done the legwork for you. We enlisted the help of financial professionals to answer the most frequently asked questions regarding 401ks. Number 3. And choose a bank that doesn't charge you various, wallet-busting fees. It's difficult to maintain your money in the bank when monthly maintenance costs and overdraft fees are eating up a large portion of your balance when you're just starting to save. Oh, and did we mention that if you make too many withdrawals in a short period of time, you may be charged a fee? Insufficient cash, ATM usage, and wire transfers, among other things, might result in charges. At this rate, it nearly feels like you won't have enough money to live on. Choose a bank that has little or no fees to ensure that your money isn't eaten away by the bank. You'll still have to be responsible with your money, but you won't have to pay for even little mistakes. Marcus by Goldman Sachs is one option for a no-fee high-yield savings account, but conducting some additional research may help you choose the account that best meets your needs. Number 2. Take advantage of that sweet interest by putting your savings into a high-yield savings account. Your present bank may be paying you a pitiful rate of interest on your money. While the average savings account interest rate is 0.04%, several offer significantly lower rates, meaning you're making pennies on your money. There are, however, alternative ways to make your money work harder. Some banks provide high-yield savings accounts, which allow you to earn a higher rate of interest on your money. Keep in mind that these rates may fluctuate when the Federal Reserve's interest rates vary, but you'll still get a better return than if you kept your money in a low-interest account. The interest rates offered by online banks are frequently higher than those offered by traditional banks. This is because they often have lower overhead costs, allowing them to provide more services. Number 1. Pay yourself first. Saving money can be difficult at times, especially when bills, debt, and home expenses seem to pile up. It's easy to get caught up in taking care of, and sometimes splurging on, your bills, even if you aim to save a little money this month. Then, I'll save money this month becomes, I'll save money next month, and so on. And the cycle goes on and on. When you pay yourself first, which means saving or investing a small portion of your paycheck as soon as you get it, saving is no longer an afterthought. It's no longer something you can do if you have some spare cash. That isn't to imply you shouldn't pay attention to your expenses. You can also set up an automated transfer of funds into your savings account, so you won't have to do anything except save. I hope you enjoyed our video. Please let us know in the comments area below. Thank you for being with us. Please like, subscribe and turn on the notification bell before leaving. Thank you for watching How to Make Money Top 10 video channel.